Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday, May the 8th, 2013. We'll be looking at some longer-term charts today, probably some short-term charts as well. We'll be looking at several, though, from around the globe, so it's important you guys take note of this video. It's going to be one of the important ones. Looking at Australia's market to start off with, we're looking at the long-term chart. This is a 2-year weekly chart, so the time frame from start to finish is 2 years, and every candlestick represents a single week of trading activity. That means the current candlestick formation on all the charts I'm going to show you are not finished forming. We haven't got to Friday yet, so that could still change in what it looks like. So we're not going to be analyzing the candlestick itself. The main thing here, looking at Australia's market, I wanted to show you guys that, again, I'm calling a peak in these markets, and I'm actually, well, not to say that I'm calling it today, but I'm trying to show you that this is why I'm looking for these peaks and these opportunities to sell as opposed to going long. The main thing here would be to show you that we have made a nice move up here, a really massive move, and that's great. Everything, I'm glad everybody's happy with that. But here's the thing I want to show you. When you're looking at the ultimate oscillator, you can see this high point here on the momentum indicator there, and then the lower high here, so it's trending down. And this right here is one of the ways to look for divergences, is simply look within the peak itself and say, okay, we've got a high point here and a higher high here. It's trending up, yet the momentum on the oscillator is saying no, it's going the other direction. And that's typically where you find you find a top signal. That's where you look for. You don't just start short because it does it. You wait and you see, okay, where's that signal? Where's I'm getting those sell signs? And when you get that, then you can start looking for those short opportunities. And that is why right now I'm looking for those sell opportunities in the market. People keep asking now, why are you trying to sell now? Why are you trying to sell now? Because we have this developing. You can do it different ways. You can do it like I just shown you here, where you've found a divergence within the peak itself, but you can also do it between peaks. And so let me show you how you would do that. Here again, the same method we had over here. You can set the high point here, lower high here, trending down. Same time period on the chart, high point here, higher high here, trending up, saying it's not true, not sustainable. It's going to fall apart because momentum is growing weaker. Therefore, the price activity may go higher, but it won't be sustainable. You look for that to break down, and then you start selling because you expect it to fail there, and that's fine. The second way to do that would be to look at different peaks. From this peak here to this peak here, you can't do it because this is higher than this one was, and so it's justified, and we don't have a problem with that. Not quite as justified, but it's still justified. In this particular case here, between this peak here and this one over here, we can do that. You can see very clearly we're basically flat, looking like we're fixing to go a little bit higher. That's fine, yet the momentum indicator, nowhere close. I mean, I'm completely telling you BS, don't fall for it at all. Now, somebody is going to say, but Christian, you don't get it. It's the Fed. Well, guess what? This over here, Australia's market. U.S. is not over there driving their stock prices up. Are you going to start ignoring charts because the Fed is doing something in the U.S.? If that's the case, then stop watching my videos. There's really nothing I can do for you because I'm going to show you charts every night. And if you honestly don't believe that, well then, stop wasting everybody's time, right? I actually do believe that the charts are telling you what's going to happen the same way that you could look at any of their charts I'm about to show you and read the same information. This is a fake run to the upside, and of course I'm going to look for a short opportunity in this. Quick little glance here at the Dow Jones Industrial Average. You can see the basic same overall story. High point here, lower high here, trending down. You can go here and do this little number here. You can see, hey, wait a minute, you should be able to call that top there. We did, actually using this exact same method. Over here you can see right now, you can high point here, lower high here, even lower high here, obviously clearly trending down on the peak formation here. So obviously this is where you want to be looking for that sell opportunity, right? It makes perfect sense to me. That's why I'm looking for this. Yes, we've had a massive move to the upside, and I'll show you something in a little bit that will show you that all of this is actually going to get erased, but everything above that line right there will be erased. You could actually be a little more conservative and say everything for basically the entire year, but we'll get to that later. The main thing here is you should be looking for a peak in this rally here. Again, no market moves straight up. So you have a move to the upside and a pullback. That's fine. Move to the upside and then what? A pullback. That's fine. If you're not going to have pullbacks and you're just going to go straight up for the rest of the world, then don't watch my videos again. Go sell everything you have and just buy stocks because everything's going to be awesome for the rest of your life. Of course, that's not how the real world works, so maybe you should just keep watching charts. Quick glance here at the London Financial Times Index. The same basic overall story. We talked about this back when it was happening. Wrong tool. The right one. See you there. And you can see this high point here, lower high here, same time period. Price activity was going higher. This was not sustainable. Obviously, bearish divergence telling you look for us to pull back here, and we had that nice pullback. Now we've had another move to the upside, making a higher high, yet the momentum indication, no, not even close. On top of that, it doesn't really matter what happened. If you pressed higher and then somehow got this guy to go up here, great. You got the previous high up here at 90. You're just not going to take that out. And so whatever formation you get, you're going to still get a bearish divergence. So yes, you should, of course, be looking for the peaks here. A lot of people think they're smart and they'll come out and tell you, well, I'm going to be long until the trend changes. Guess what? When you have a line right here drawn on the high points and low points like this, and then you actually have it closed below that, the trend did change. Your uptrend just broke. That's what's happening here. Now you may have different variations of that. You can see a scenario where you break and then you come up here, fail, and then you go lower. You could have like that. You could have it simply where you come up here, you go flat for a while, then you break down. You could have it where you do a rolling kind of a top. You have those formations. You could have head and shoulders patterns. You could have broadening tops, which is currently what we think we're seeing in the markets. But the main thing here is there's many different ways to do it, but it's all the same thing. It's just rolling over. It's topping. So again, yes, you would be looking for tops. You would not be looking for, I need to be going long here. Not with my money, you won't. Quick glance here at the NASDAQ, same basic overall story. Again, I want to point out we're using long-term charts here. Long-term charts are stronger than short-term charts. And so when you get a signal from a long-term chart, it's even more trustworthy than a short-term chart because there's more data on the long-term chart, and therefore it's just more trustworthy. And that's the main thing when looking at these charts. You can see the overall thing is the same. You've got the high point that you have from way back here, a lower high here, you start trending down. At the same time period on chart activity, you have this situation going on here of fake. You look for a nice sell opportunity, catch that. What we did, it was great. Then here as well, again, lower high than you had over here, lower high still than you had over here, and now what do we have here? Even lower than any of these. So all of this little, oh, we're going to take off and go to the moon. No, you're not. It's completely bogus. You could do different ways to analyze this chart and come to the same conclusion. You could look at this chart formation and say, wait a minute, this is not a bullish chart formation. Any jump out of here is just temporary. It's probably on low volume, and we actually go look at it. We've already talked about it in previous videos. It is low volume rally. So no, we don't expect this to hold in any way, shape, or form. We expect it to break down, unless you're going to go with the, no, wait, the Fed is the all-knowing, powerful Oz, and he will never let the stock market go down. Good luck with that. I'm not going to bet on that. I'm going to actually follow my charts. And if you're not going to do that, then again, stop watching the videos because I can't help you. Quick little glance here at the UUP, the U.S. Bullish Dollar Index Fund, on long-term chart. The reason why I'm showing you this chart is because I actually have marked the chart on the short-term chart, at least, on the website at perfectstockalert.com, and I recommend you check it out. There's a buy opportunity there. The reason for that, and it's to make perfect sense, again, all your charts should be telling you the same thing. So go analyze all your charts and make sure they're telling you the same thing. I will bet you money that they're not all telling you buy because the Fed's going to drive prices higher, because they don't all get benefit from the Fed. So they can't all be doing that, right? So there's a problem in the flying your ointment if they're not all confirming one another. In this particular case, we were talking about in the short-term time period, looking at this as being a pullback. Why would we look for a pullback here? Because you had a lower series of low points. You took out, you broke the uptrend. Then you get a lower series of highs from one to the other, right? So you're moving lower here. You get a lower low than you had over here. So we were completely bearish on this. And then all of a sudden you get a move up here that takes out the previous high. So now you have higher series of highs, lower series of lows. Why did I try to sell right here? Because if you're still going to change direction, you still have to do one more thing. Pull back and give me a higher series of low points. So you have a low point here, and then a higher low here, or somewhere, as long as it's higher than this point here, right? That would give you an uptrend. Then you'd be able to say high point, higher high, low point, higher low. That would give you uptrend, then you start buying. That's the same thing you're missing in the U.S. market. So you have a higher high, like you have here, and that's great. People say, well, we're just going to keep running forever. Guess what? If you don't come back and test this low, you will eventually. It's just going to be a bigger bill to pay at the end of it, all right? This is not good what you're seeing happen in U.S. markets. In fact, the UUP shows you the same thing. What this chart is showing is prepare for a bullish move in the dollar. Why would you have a bullish move in the dollar? Well, there's various different reasons. You could have a bullish move in the dollar if nobody wanted anything to do with the actual euro. You could also have a bullish move in the dollar if everybody started selling stocks, because when you sell stock, you in effect buy the dollar. That puts a floor in the price of the dollar and drives it up, right? So again, I'm looking for this chart saying, see this move is starting to turn from a downtrend to an uptrend. Therefore, I should be looking for an entry opportunity. I believe we're starting to see some signs of that. Go check it out on the chart. And then again, that would be bearish scenario for the stocks. Again, confirming what I've been telling you. The Russell 2000, this is a great short opportunity for a lot of reasons on the short-term chart I've already shown you, and I'll be keeping an eye on that. We're starting to see some development of a little shooting star that happened today, and then it got changed by the end of the day, but keep an eye on it. It will develop. And again, same conditions, bearish divergent formation here. We're telling you to look for a sell opportunity. We were looking for that, took advantage of that when it happened, and now we'll get another one. You can see we're making higher price activity between these 2 points, and yet we're not seeing that on the momentum indication. So, in fact, you should be looking for a sell opportunity in this market. Uptrend has already been broken. You see it close below there on the uptrend line. And this is nothing more than a topping pattern. So again, people out there who think they're smart using the right lingo, I'll wait for the trend to change. It's changed. You just aren't capable of seeing it. Looking at the SPX, the S&P 500 Large Cap Index, the same basic overall story. I've already shown you all the other charts. You can see the previous formation here. You can see it sloping down the same time period on the chart. Price was going higher because it was an unsustainable little bearish divergence. You look for sell opportunities in that situation, and we took advantage of that, made money. Here, the same thing, developing. Okay, whenever you use that, you want to be looking for the right entry opportunities. Got to be the right short-term signals on the shorter-term charts, which is long-term charts. But you want to be looking at those, and then you see here we're going even higher, and you're doing even weaker here. There's no way this is a sustainable situation at all, unless you believe it is, and then you say, okay, well, I believe that the Fed's just going to make things go higher. We'll never have another down day. Well, if that's your case, then all right, go for it. But that's not mine, so I'm going to keep reading charts. It's important that you watch the SPX. I want to show you a very important reason here. Whenever you look at the S&P, you got to understand that it is the inverse of the VIX, and what the VIX is showing in the long-term chart is very, very detrimental to the move that we're seeing here, and more importantly, it's showing that it is at the point of reversing on you. So again, telling you should be looking for sell opportunities in stocks. Let's look at the VIX. Okay, looking now at the VIX, the volatility index, and you can see that whenever you're looking at this, it runs the inverse, or the opposite of the S&P 500. This is actually the reflection of the option activity, so from hedge fund managers and things like that. So if they're confident in the markets, then they'll go out there and they will not worry about hedging their position with options. When they're not confident, you'll see them take a bunch of hedge positions on protecting themselves from the downside activity. So back here, you would see this move here. They're increasing their options, and so they're anticipating a market pullback or a market crash, something like that. And during the same time period that you're seeing the VIX go higher, you would see the S&P go lower. And that was here at the time frame where you had the fiscal cliff going on. So you can see how they just correlate back and forth. You can also pick up certain things like confirmation on charts. I just showed you a whole bunch of charts that were showing bearish divergences. Well, if that's true, then you should see a bullish divergence on the VIX. And what do we have? Well, if I spelled this right, it's a bullish divergence. So you've got this low point here, higher low here, even higher low here. You're trending up. Momentum to the downside is not growing stronger. It's growing weaker. You're seeing momentum to the upside is getting stronger. High point here, higher high here. So you're turning around here on the momentum. Yet, the same time period, if we move this down, you can see this low close here. Everything below that low close is fake. It's overshoot to the downside, not sustainable. On top of that, if we clear that up a little bit, you also have a very strong chart formation. Low point here, bounce up, lower low here, bounce up, low point here, roughly the same level as the previous. All you're forming here is an inverse head and shoulders pattern, which calls for a reversal to the other direction, saying that all of this here will be shot out to here. You'll be back up here testing this level again. So a big move again in the VIX, telling for a big move to the downside in the S&P. I would again put the VIX up here flirting with the 200-day moving average in the long-term chart. Not day, but period moving average. Anyway, the main story here is every chart is confirming the exact same thing. I may be the last bear on the planet, but I'm still very confident that the charts are not lying to me. And if they are, then it doesn't matter what you do, because the Fed's just going to make the markets go straight up. But that's the story, then I'm wrong. And if it's any other story like a black swan, the Fed turns around and says, guess what, we're out of money. Whatever happens, then we have a problem with it. Now, again, I've shown you on charts going around the globe, and you've seen Europe charts, and the Fed's not over there. You see Australia's charts, and the Fed's not over there, and that sort of stuff. So why is it that everybody thinks that, no, that none of these charts matter? They matter. You may not like it, but they matter. If you don't want to listen to me, fine. Ignore everything I say about the S&P, but don't ignore everything I say about the charts that are not affected by the Fed, right? That makes sense. Oh, wait a minute. That makes sense? If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free. Also, that when I was talking to you guys earlier about those charts that are updated, right here on the market chart section, you can click there. I update them nightly with my annotations as well, my stop loss limits, so forth and so on. So check them out. God bless. Enjoy the evening, and I'll see you all tomorrow. And guess what? I'll probably still not be a bull tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.